Does everybody tell me if everybody sees the chart of the euro dollar? Yep, everybody sees the chart of the euro dollar? Okay, great. All right, so I'm going to get rid of these lines. And all right, bear with me. I just gotta rearrange my screen here so everything is comfortable. Okay, so I'm going to show you an absolutely crazy momentum strategy, and it comes with full warning that it's a horrible risk reward, that it's really not what anybody teaches you properly, but it's something that I've been trading myself, and I think it's kind of very interesting to consider, especially on the euro complex. And the idea basically is the following. Those of you who are familiar with my flow strategy know that I basically trade my flow strategy between the hours of 4 a.m., so 4 a.m. New York time, this is all New York-based charts, to the hours of about 11 a.m. New York time, the prime liquidity hours. Excuse me. This is when momentum has the highest opportunity to occur. Momentum has the best opportunity to happen. And when we have continuation or strong reversals that can generally give us the extension that we want. And those of you who know me generally know that we trade the round number moves. That means we're trying to basically take the move from the either 55 from over here from like the 5,500 all the way down to the 00, right, to the 00 level, or occasionally I'll take the moves from the 00 level down to the 55. But what I do with my strategies is I generally have a 30 to 33 point target and a 50 point stop. And as I said to you, if you're 65% accurate, you're generally going to do okay. But one of the interesting things that I found that I think is kind of really interesting to examine is if you just look at the round numbers during these high liquidity times, that is the 2,300 in this particular case, or the 2,300 back here again, 2,300 back here again, 2,400 back here again. If you look at the 00 numbers and you look at the breakthrough those numbers during the high liquidity times, if you give yourself a very, very small profit target of just 15 points with a really, really large stop of 50 points, again, a horrible risk-reward ratio of 3 to 1, what happens is across not just the euro, but the whole euro complex, euro Aussie, euro yen, even Aussie dollar, you have generally really high probability trades. If you're risking 15 to make, if you're risking 50 to make 15, you have to be correct 8 out of 10 times. Chart is on, right? You guys see the chart? You have to be right 8 out of 10 times to win. But what happens is you tend to be very accurate a lot of times. Here's a chart of the euro dollar just for the last couple of days, where you can see a break of 2,300 with an 85 stop would have worked. A break of 2,300 here in the high, again, only in the high liquidity times would have more than worked. A break of 2,300 again in the high liquidity times would have really worked very well, right? But what's cool about this is it's not just the euro. It's also, I think, works very well on the pound, which is one of our biggest nemesis. Let me just pull up the pound. So we can look at the pound during the high liquidity times, which is the 5,700 over here, right? This is 7 o'clock in the morning New York time. 15 points would have worked, right? If you look at this is 4 o'clock New York time, so it really doesn't really apply to us. But this is a move in the 8 o'clock hour back to the 5,700, and the high here, as you can see, was 18, right? Well above the 15 would have worked for us here. Here's a move into 5,700 that would have worked here. What's interesting is if we move to the really, really big numbers, this is not high liquidity time, so we wouldn't have taken these trades. But can you guys see the chart, by the way? I'm sorry. Does everybody see the charts? Okay. All right, because I'm seeing people putting questions I wanted to understand. So I wanted to show you, here's a really, really interesting point. This is the high liquidity of the 160 move, right? Now, in the 59, it would have worked here on the plus 15. In the 160, I believe there was a move right here. No, did it tick me out? I'm trying to remember. There was one where it didn't work well on the pound. Actually, the pound was really working very well across almost all of these. Well, here's a move. No, even here. Okay, so here's a move to 159. This was a move to 159 where it didn't quite make the target and it failed. But it moved. It made 59 target here. It made the 60 target here. It made the 58 target here. And you guys basically get the idea. Dirt Salesman is asking a really great question. He's asking me, am I doing this as on a retracement mode or as a continuation when it reaches a round number? And the answer is always, 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 always on the continuation mode. Every one of my strategies are what's known as stop entry. I'm always entering my buys above the market, my sells below the market. That means I want momentum on my side. I want the price to blow through my target. So I'm never buying down and I'm never selling up. I'm always selling down and buying up. That's why I'm only giving myself 15 points of continuation, because as you can see, it's already a lot of momentum. I'm just trying to ride the wave, and I'm trying to collect, which is what I think Mike was talking about here. The idea of collecting nickels all day long. You collect nickels, collect nickels. So basically, the whole idea is you're collecting 15 cents, and then sometimes you drop half a dollar. You collect 15 cents, and you drop half a dollar, and you hope to collect a lot of 15 cents, especially across a lot of different currency pairs where this occurs on small size. So as I said, if your regular size is 200,000, let's say 100,000 euros, then maybe you cut it down to 50,000 euros. And I'm generally using this with the OO numbers. I didn't say 55. I said OOs. Zolt is saying, so if I'm making 10 trades, you'll be positive 20 pips. Well, I think you're up. Yeah, you're right. It is positive 20 pips on 10 trades if you're 80% accurate. What has been happening, or at least in my current trading, and again, no guarantee this continues to happen, is that the edge is actually closer to 85, 87. So the edge is actually close to maybe 30, 40 pips per 10 trades. If you can get anywhere there, that's nirvana. I mean, if you're making 30, 40 pips every 10 trades on an intraday basis, you're doing really, really well, because that's how it adds up over a long period of time. So yes, it's a lot of this kind of, you basically picking up a lot of nickels along the way. You're like an explorer who walks the beach. Now, as I said, Trying Trader is saying most teachers I've listened to will not agree with my risk and reward strategy. That's exactly the point. I told you it's absolutely crazy.